There is a very disturbing trend that's going on right now, and that's with the interest rate hikes. There's a lot of individuals that I've talked to that are referencing articles that they're seeing on a lot of the different financial sites across the country and around the world that have one common thread. And that thread is, get ready, interest rates are preparing to fall. And this is something that's being discussed over and over and over as though it's a pregone conclusion. Interest rate hikes have gone up for the last couple of years. Therefore, it just stands to reason that they're going to plummet back. And I'm thinking, well, time out here. I mean, what if we start to have some decent economic challenges? We're seeing a lot of problems right now in China, seeing a lot of things with their economy. 2023 was supposed to be their year. Things were supposed to turn around. It's supposed to really start to boom. And a lot of things from an economic standpoint, they're going to be a juggernaut. They've done anything at this point in time other than collapse to the point that it's becoming an issue almost of national security for the Chinese government. And you're seeing a lot of things that are playing out here where, of course, when you talk about the downgrade that we recently had, this will be on another Day Trade Fund video of the United States, and you're looking at some of the concerns that are up and coming with regards to some of the fiscal challenges that lie ahead. We have some serious problems. And this idea, this preconceived notion that interest rates are going to go back down, it's dangerous. And here's what concerns me the most. People that are investing, people that are positioning their finances at this point in time are doing so with the idea that interest rates are in fact going to go down. And it's just a matter of when. Now, historically, which is how I think, I go back to 1971. Of course, I wasn't buying a house back then. I was 19 years old. But I can look back and see that the interest rates were 7.5%. Then we had the 70s go as the 70s went. Wasn't real good from an economic standpoint in some regards. Interest rates shot up to 16%, actually 16.35, I think it was, in 1980. And you're like, wow, it couldn't have gone any higher than that. Well, want to bet the following October went up to 18.5%. Imagine walking in to buy a house and it's 18.5% interest. It just boggles. We go a couple more years. It drops a little bit, 14%. Down 1984 goes to 11%, I think 87, and then continued to go from there. It went down to 9% in the mid-90s, and then went back up to, I think, 2000. They were around 8% or so, and fell to what we had recently here in February of 2021, with a lot of stuff that was going on, obviously, down to 2.6%. So interest rates start to climb. Now we're back up to 5.5, 6. And as it continues to climb, investors are saying, well, look, a couple things are going to happen. The Fed's going to stop raising interest rates, and it's going to pause, and then they're going to fall back. Now, keep in mind, Fed Chairman Jerome Powell, who I like a lot because he's a lot more transparent than any of the Fed chairs we've had in the past, in my opinion, said, look, we're after 2%. 2% is our inflation goal, and we're going to continue chugging along until we get to that point. And even though a lot of this economic data keeps coming out, people are like, well, now's it. Blow the whistle. Time to pause, and we're going to start seeing interest rate cuts in the near future. Fed Chairman Powell is saying, look, there's nothing on our table, nothing on our radar that suggests that at all, given the current circumstances we're in. People aren't listening to Jerome Powell when they're arranging their finances. They're listening to the talking heads on TV, the headlines that are coming out, the articles that are being written to try to pressure the Fed into making a decision to pause interest rate hikes, no more interest rate hikes, and then start reducing them. There's people right now that I've heard of that are renting at some exorbitant prices because they're not going to buy a house at 6%. They're going to wait until the interest rates drop, and that's when they're going to move in to a home. They're renting right now versus buying. They want to buy desperately, but they say no, because the minute I do, the interest rates are going to drop back to 3%, 4%. And I'm like, how do you know that? Well, because haven't you been reading the newspapers, Jay? That's what all the experts are indicating. Guess what? These experts don't know anything. I can't predict the future. They certainly can't predict the future. All we can do is look at what's going on from the economic standpoint to get an idea of how things could progress. Do I see things getting better when I see that Social Security is going to run to the point it's going to tip in the next 10, 12 years, where they're going to have more people taking versus those that are contributing? When I see a lot of the pensions right now that are underfunded around the country and around the world, when I see a lot of the economic issues that are being created because of some inflationary issues that are still there, when you have a greatly reduced workforce where the cost of goods and services continue to rise. Look, there was a lot of things that brought down the interest rates in years past. I don't see any of that coming in the future. And as a result, the idea that I'm going to sit back and bank on the fact that interest rates are going to go back down. No, there's people right now that are buying houses they can't afford. Please don't do this. They can't afford them. But they say, gee, I'm buying them now. We can't afford the house, but very soon interest rates are going to drop. Then we'll be able to refinance our house and we're going to be okay. And I'm thinking, oh my gosh, you're staking your financial future on something that you read in a newspaper. I don't care if it's the Wall Street Journal. It's a well-respected publication that you trust dearly. The idea of taking financial steps like these are drastic measures based on what might happen. Well, what if interest rate hikes continue? What if the interest rate continues to go up? What if we see instead of 5, 6% go up to 7, 7.5%, 8, 8.5%, 9%? If people are losing their minds now, I mean, buckle up on what's going to happen coming down the road. Now, from an investing standpoint or a day trading standpoint, because we understand there's a difference between those of us that day trade and those of us that invest, the investing crowd is the buy, hold, and pray. You know, they'll hold a stock for 5, 10, 15 years, something I am not in favor of at all, given some of the economic landscape that we see that's pointed in our direction. I'm very much a risk-adverse kind of guy. I'll take a large portfolio. I'll use small pieces in the market. I'll use that money for a short period of time. I'll get in and out in less than 20 minutes on most of the stocks I go after, my students go after, make that 5 or 10%, shut things down many times after the first couple hours of the day, go do something else I want to do, and not really worry about any overnight positions or anything that I have from a long-term basis. Now, that works for me because of the fact that you can generate a tremendous amount of money through that short-term approach, a lot more than you can make through the long-term drop, increase, all that kind of stuff that goes on with larger portfolios. We see that, we prove that all the time. Now, the concern that I'm having right now is the amount of people, and it is a majority of individuals, that are listening to the idea that interest rates are going to drop very, very soon. We came into 2023 this year with a chorus of people that were saying it's not going to be long. Mid part of 2023, the Fed's going to start bringing these interest rates down. And people started hearing that. They started believing that. And of course, I'm on the sideline saying, what are you talking about? That goes against everything that the Fed has indicated they're going to do. It wasn't but a year and a half ago that we had Janet Yellen and we had others as far as on the Fed side of things and Treasury with Yellen and others saying, don't worry about inflation. It's not going to be an issue. It's transitory, temporary, here and gone. Don't worry about it. Well, obviously it arrived, and it arrived with some force, so much in fact that those same individuals had to say, well, you know what, we kind of misplayed that. We're late to the party, and they've done a good job of trying to catch up. Fed Chairman Powell knows that if you do what you need to do to stay ahead of inflation, you can prevent it from going into that hyperinflation type of mode. Here's the scariest part. If the Fed actually decides to listen to these outward pressures that say stop, what's going to happen? We could see inflation go nuts. If you've got a good memory, you remember when I said 1971, what was the interest rate? 7.5%. It was in the 70s that the Fed was doing a lot of things to try to stay out of inflation. It was working. The Fed took their foot off the accelerator. They figured they had done enough. As we were approaching the 80s, no more really needed to be done. And then inflation took over. And the next thing you know, you have runaway inflation. Then we went from a 7.5% interest rate to 16% interest rate. The Fed chair and others are very, very well aware of that history. It's not ancient history to them. It's something that is on their minds constantly. And the one thing they don't want to do is back up, be forced into backing up and doing something that they've said they're not going to do. Their game plan is predetermined. They're going to continue doing what they're doing until they reach an inflation goal of 2%. Now, there's other things that they're going to look at doing as far as tweaking things just a bit. But folks, if you're one of these individuals that are expecting the Fed to start decreasing the interest rates by the end of the year, I'm not going to say it's an impossibility. Look, this is life. Anything can happen. But the odds to me are severely stacked in the side that it's not going to happen. You throw in some regional bank issues and some other corporate issues where we start to see a lot of companies struggle and file for bankruptcy and go through some other things in the second half of 2023, you're going to see a lot of economic upheaval. You're going to see a lot more volatility in the market. You're going to see a lot more stocks going down versus going back up. You're going to see a lot of panic to the point that people are really going to be questioning what they should be doing with their investments and changing a bunch of things they shouldn't be changing. And what's going to end up taking place is you might go 2, 3, 4 years down the road and look at your account and it's dropped considerably from where it was at today. I'm not saying, again, to take all your money out of stocks, and I'm not saying to change drastically what you're doing. I am saying if you are looking at making any decisions, future decisions, based on the idea that interest rates are definitely going to be going down, it's my opinion that you should be very, very careful about making those decisions. Because if you do, you could end up painting yourself into a corner where all of a sudden you're going to be looking at a no-win scenario where you've made a financial decision based on something you thought was going to happen that hasn't happened. And I can tell you, far too many people are taking that approach, and this is not the day to be taking those kinds of chances. One of the things that we know at Day Trade Fund is that things can always change one way or another. And when you're looking at the changes that are coming in the future, they're going to be coming fast and furious and often. And you've got to be prepared for what's going to be taking place. So please, when you're hearing these individuals promise about the interest rate hikes coming down in the near future, please take that with a grain of salt and don't base your future financial decisions on a lot of these claims, which are nothing more than wishful thinking, more than not.